We often go back to 1999. We had a bull market, as you know. Stocks were going up. And in 1999, people thought stocks would go up forever. They thought multiples would expand forever, earnings would grow forever, the economy would never stop growing. So we thought we could take on a bit more risk because stocks were going up and they were less risky. And that was the wrong time to think that you could change the way you invested in the marketplace. And there was that momentum of optimism that had people more excited. Well, 2008, as we know, was the polar opposite, the 180-degree opposite. It was the momentum of fear. People thought stocks would never go up again, earnings would never grow again, multiples would never expand, and every bank was going to disappear. And in fact, we know that didn't happen. And it's both of those scenarios we believe are the wrong time to change why we're investing in any market. There are times we can be more afraid, obviously, but there's also a moment we have to be very careful. Most interesting is that the world is still looking to invest. I was in Beijing a couple of weeks ago visiting the Central Bank of China. They have $3 trillion. It's the largest pool of money in the world. Yes, they're looking to diversify out of US dollars because they're thinking of different ways to grow their asset base. But at the same time, they also are looking to invest. And this is not private information because they went and actually tendered for the world to come and offer some ideas. But they look for 4 things: real estate, private equity, emerging debt, and global resources. Someone to manage a basket of companies that make copper, nickel, zinc, gold, oil, uranium, fertilizer, anything to do with commodities. Because in China, they're buying all this stuff, but they're not benefiting from the prices going up. So why not own companies that actually make the stuff and watch the prices go up? So that was very encouraging because at a time when everyone thinks the world's not going to grow anymore, here's the engine of the world that's deciding, you know what, it's still going to grow. And we want to own those companies that make the stuff. So that's great for Canada, as we know. The Canadian stock market, very simple to figure out. We're 50% resources. 50% of our market is copper, nickel, zinc, oil, gold, uranium. The other 30% is banks, financials, that pay a nice dividend. And then we have Lululemon, RIM, and BlackBerry.
From the early 2000s to the present, there's been nothing but a steady decline in manufacturing jobs. And the reason has been because of the outsourcing of work to countries with lower labor costs. It's been automation, it's been robotics, and it's been better quality. If you're making better cars, you don't need as many of them. This trend may not keep going this way because even China, for example, is starting to have a nascent labor movement. They've had big increases in their wage rates there, and China's outsourcing work to Vietnam. So the graph may not keep going down. In terms of construction employment, that number's gone up dramatically because of things like a very strong residential sector and the government stimulus money. And this is crucial. It's the mega projects. If you think about what's happened in Canada for the last 10 years, and going forward, it's resources. It's been offshore oil projects, and it's been potash mines and diamond mines, gold and silver projects, oil and gas projects, and hydroelectric projects. So this is what's really transforming the country. There used to be 3 manufacturing jobs to every 1 construction job. That ratio is now down to 1.5 to 1. So the industry that we're in is, to an extent, what's driving this country and what will continue to drive Canada right up till at least 2000 probably. And it's because of that demand from emerging nations. And this has implications, all kinds of implications. What it tells you is Canada has always been a hewer of wood and drawer of water. But most of that was in connection with the resources that we would produce and we would sell to the United States. Now that demand is coming from other nations. We're still very much tied to the US economy, don't get me wrong, but we're not just an appendage of the United States anymore. We have to sell these resources to these other nations. Plus they're investing in Canada. And we want to be tied to those other countries as well. I mean, there's tremendous opportunities in China.